In 2024, the global economy faces turbulent times. But what if I told you it's your golden opportunity to prosper? Contrary to what most experts might say, this year holds the key to potentially skyrocketing your wealth. Forget the conventional wisdom. We're here to unveil the secret strategies and targeted areas that can turn the looming recession into your financial breakthrough. Ready to transform economic challenges into wealth? Let's get straight into the details in this video. Take a moment to consider, is your main income source recession-proof? If you're uncertain, it's crucial to pay closer attention to this aspect. So, how secure is your financial foundation really? Your earning power is the place that starts it all. You'll be left helpless if you lose your primary source of income. It won't matter if you're savvy at investing if your primary source of income isn't consistent. This eventually exposes your finances because all your effort will be directed towards finding a new job or starting a new business if you're self-employed. Expanding in this regard is a great way to protect your earning power. Start a side gig or hustle to reduce your dependence on your day job. There are tons of things that you can start a side hustle with. All you need to do is to figure out what skills you have and what skills are in demand today. The less burden there will be on your earning power and the more protected it'll be, the likelier you are to thrive during a recession. Nobody has ever gotten rich by just their savings. A line we hear so often, yet fail to understand its true meaning. It's very likely that you're going to experience a financial crisis during a recession. For this, you need a solid contingency plan to strengthen your emergency fund and savings account. Think of it like you're 7 years old again. You want to set up a lemonade stand that will bring you money. But to set up the lemonade stand, you need to save up some money to buy the lemons, sugar, water, and the stand itself. So, this is how saving your money will snowball into helping you earn even more. And if you manage to pull off saving money during times of recession, then you should pat yourself on the back because of how well you're managing your finances. You can analyze every expense you currently have and cross it out if it's unnecessary. These budget cuts are necessary to ensure your money goes into your savings and not on needless expenses. If you aren't using every part of your house, you better be earning money off those parts. This simply means that you should search for ways to generate money using the house that you live in. For instance, if your garage isn't something you use frequently, you can rent it to someone in different ways. You can offload it as storage or parking space for cars, RVs, boats, or other large vehicles. This method will help you save a lot of money and even more if you don't have any pending house payments. This house hack will bring in extra cash while ensuring that the extra space in your house doesn't go to waste anymore. Thinking about the money you might need soon? Make sure your short-term investments are safe from the economic downturn. Short-term investments are like a safe spot for your money, meant to give you a little extra while it hangs out for less than a year. Check out recession-proof options for any cash you need in the next year or two. If your short-term investments seem risky, selling them now is smart. Consider moving that money into safer choices, like precious metals, everyday essentials, or stocks that pay you back regularly. Now, for your long-term investments, it's a different game. Look for assets that usually drop a lot when things get tough economically. Why? Because you might get a great deal on them. Just be careful to pick assets that will bounce back in the long run instead of disappearing altogether. Imagine it's a big sale day for your money in the stock market, like Black Friday for your finances. Here's the deal. The stock market often goes down before a recession. And here's the exciting part. After the recession, it usually bounces back, and sometimes even better than before. On average, the S&P 500, like a group of big companies, has given a 16% return in the year after a recession. And if you look at the big picture, it's been about a 10% return every year since it started. The smart move here is to consider buying exchange-traded funds or ETFs. These are like bundles of different stocks that can give your money diversity. A good example is an ETF that follows the S&P 500. It includes big, stable companies, so it's a safer bet. But here's a tip. Certain stocks drop more during market downturns, giving you a chance to buy them at a bigger discount. Think of it like getting a great deal on something you really want. Tech stocks, growth stocks, and small-cap stocks usually drop more. You can play it safe by buying ETFs that focus on these kinds of stocks, like the ones tracking the Nasdaq for tech or the Russell 2000 for small-cap stocks. Now, there's a riskier option for those who like a bit of excitement. You could try picking individual stocks, especially those that have taken a big hit but might bounce back strong. However, be warned, this comes with more risk, as any company could go belly up. Only go for individual stocks if you're a pro at this money game. Standing at the brink of a recession brings an unexpected benefit: the likelihood of reduced interest rates. Yes, you heard that right. Lower interest rates translate to cheaper borrowing costs. This strategy is designed to kickstart the economy, offering a much-needed stimulus in challenging times. Understanding this can be key to navigating the economic landscape ahead. When the Federal Reserve lowers interest rates, it becomes easier for companies to borrow money. This is important because it helps businesses stay afloat and gives them a better chance to grow again. Imagine it giving companies a financial push to keep the economic engine running smoothly. But here's the interesting part for individuals like you. When interest rates go down, borrowing money becomes less expensive for regular people. This opens up a couple of opportunities. Additionally, low interest rates make it cost-effective to borrow money for investments. For example, if you're interested in real estate, you could borrow money at a lower cost to invest in rental properties. This means you have a chance to make smart financial moves like expanding your investments and taking advantage of favorable borrowing conditions during economic downturns. Have you ever thought about having your own business and being your own boss? Well, guess what? During tough times like recessions, big and small companies take a hit in their value. Here's a fantastic idea. Instead of starting a business from scratch, you can buy one that's already up and running, especially when the economy is not doing so well. See, when things are tough, some business owners decide they've had enough or are ready to retire. That's where you come in. You can get these businesses at really good prices because the owners want to move on. It's like getting a great deal on something you've always wanted. The cool thing is that during a recession, you see how different businesses handle hard times. You can peek into their financial books and determine if they can survive the tough times. It's like having a sneak peek into their performance. But a word of caution, be careful when you're on the hunt for these bargain businesses. You don't want to end up buying a business that's not doing well and end up paying for someone else's vacation to a sunny beach. So keep your eyes open and ensure it's a good deal for you. The biggest financial lie we've been told is that saving money and buying our own home is the safest way to secure our financial future. But what if it's 2008 all over again, and this time it's taking an even worse turn? Your house could be a ticking time bomb.